Hello everyone, welcome back to Commodity Trader. So this is another weekly analysis on crude oil WTI, and we will prepare ourselves for next week. Before that, let's review what have happened during the past few weeks. If you remember, not last week, before that we had a major correction from 95 to 81.50, and this is investing.com chart. There's a price difference, everybody knows that. So at 81.50 crude oil were trading waters, and we were all confused, or almost all people were certain we are going towards, crude will ultimately touch 77.50, which is a major support. If you look at the other chart in investing.com, you know that the crude oil journey started from 77.50, this area, So I emphasize the importance of 77.50 because this is a place crude oil could test in the near future. So here we were pretty much clear at 81.50 it will head towards 77.50. Still we have we have to hope for that, or we have to be watchful. Crude oil can come back to the 77.50 area, but in meantime we have some development happen last week, for example, when the market. So last week we have a new situation arise from Israel-Hamas war, and on Monday when I woke up I could see a gap up opening, and we opened above $85 and went all the way till this candle you can see here, and went away all the way to 87.24. And from 87.24 people started booking profit because people are quite worried about this big correction from 95 to 81.50, and from 81.50 when they look at it from their point of view, it has almost reached the next resistance at 88. So the people started booking profit, and it came down by Wednesday. It was again it was back to 84.50, and on Wednesday evening, before inventory was one day late, so inventory was on Thursday, but on Wednesday we had this big candle, big correction, because people took the safe side of the trade, and they book profit, and they themselves make sure they are on a safe side, and came back to 82.31. so we had a higher low. We have 81.50 here, and we have a higher low at 82.31. so at 82.31 we have another news, which was by evening we had this news from American US side, like they are going to impose more sanctions, or the oil price rise more than 4% as the US boost enforcement of the price cap on Russian exports. Oil traded sharply higher early on Friday, rising more than 4% on concern supply will tighten after the US increased enforcement of the price cap on Russian oil exports imposed following the invasion of Ukraine war. So with this news, of United States stepping up and taking measures curtailing Russian exports, market turned bullish, and by evening I was pretty sure about a bullish move, and after during the European market opening hours, around 6:30, 7 o'clock, we have this big move happening, and we took market took almost 88 and reached 87.69, 87.70 range, and we have a closing on Friday in this range of 87.69. So by Monday, if market tends to go up, or if it gives us a gap up opening above 88.30 levels, I'm assuring you 100% by next Friday it's going to take 93 levels, 93.74. At least here, this level of 93. So it can touch 93 by next week if market maintain this bullish tone. Reduce it for you. So if I draw a Fibonacci from 95 till this support, new support created last week, 81.50 area, So if we draw a support, you could clearly see market is fast approaching where the 0.5 silver line. So market is fast approaching 88.28 and it's just short of 88.28. And again, I'm telling you, if 88.28, if there's a rejection from 88.28, it's going to be really bad. It's going to come back to 86.70, at least to 86.70. So there's a potential risk here. And whoever want to take positions, if it breaks above 88.28, keep a stop loss down 88 levels, like 87.70 or 87.60 area, then you can take position. Otherwise, if somebody is skeptical, or if people are not sure, or there is a reversal, if you find some rejection from this zone, you can take sell position, short positions, provided you keep a stop loss just above this candle here. Okay, you can take a sell position with a stop loss just above 88, 85 or 89, So I have for you the MT5 chart, which we mostly trade, and if we draw the same Fibonacci from 94 to 8062, okay, 94 to 8062, we get this levels given by FIBO, and the importance of 50% in Fibonacci, and here the 50% lies at 87.30 and 61% at 88.86. So these are major key areas in Fibonacci, which has some big importance, and if crude oil for example, if it trades above 89 area, this candle, above this candle here, right here, if it trade above 89.20, then you can be super bullish. You have to be super bullish. I'm telling you, it is going to take 92 for sure first hand. Okay, it's going to take 92 here. Then the all-time high now, which is 93, 94 area. So it's going to test 94 by next Friday. If crude oil going to be bullish and if it trades above 89, so we have to be watchful of this key resistance and support areas, which are 50 and 61 at 88.90 level. So if it trades above 89, take positions. You can even take positions if it breaks above 87.30, keeping a stop loss here at 85.50 area. Keep a stop loss here, take buy positions above 87.40 or 87.30 area, and keep a first target at 91, 94 or 92, and the second target you can keep at 93.90 or 94 area. Crude oil going to test. So for next week we are super bullish and we expect crude to take 92, okay, after surpassing these two resistance which we discussed already, which is 89 key resistance, okay. But on the other hand, if it crude turns negative, or if it turns bearish, due to some other factor, like if there is some treaty happen between Israel and Hamas, and American takes some different steps, to cool off the prices, because the election is going to happen in America. So for them, the prices are very important. So if they take some different step, so what would happen if crude turns bearish? Then you have to be very careful. You have to be watchful of this area, which is 83.80, yeah, this area. So if crude turns bearish and if it breaks below 83.80, then you have to be you can take short positions keeping a stop loss above 85. Okay, you can take short positions keeping a stop loss above this level, which is 85.84 or 85.70, and wait for targets of first target of this one, which is 80.62, and then the next target, the next big target going to be 77.50. So this is our bearish outlook also for next week. So we have to respect both. Since crude is highly volatile, especially crude made a bottom of 80.62, we have to be prepared for bottom. The real support, which is 77.50. So be watchful of both sides, and not only technicals. You have to watch the news, on a regular basis. Follow the news. Then only you can be updated and be aware of what's going on. So if you look at the technicals only, you cannot survive. So you have to be watchful of the news also. So I wish you good luck, and trade carefully with stop losses, and we will see you. I'll come up with another video by next Friday. Whoever have not subscribed, please subscribe. Forward to your friends to who